This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, July 31st, 2015. Euro dollar. So the euro has been pulling back over the past few sessions with the market gravitating towards key support from the 20th of July at 108.09. But a break below 108.09 will be required to accelerate declines and open the door for a fresh downside extension. Until then, don't rule out the possibility for a higher low and a continuation of this correction off 109 back above recent highs that we saw this week, which come in at 111.30. Sterling dollar. So cable continues to look constructive with the market potentially putting in a higher low down by 153.50, ahead of what should be the next major upside extension back towards and above the 2015 peak at 159.30 further up. At this point, only a break back below that low that we saw at 153.50 going back to the 8th of July would compromise the immediate bullish outlook. Dollar yen. So dollar yen tried to break higher in Thursday trade, but the market once again was unable to successfully close above 124.50, that key internal resistance, and has pulled back since. At this point, there's risk for deeper setbacks, with the market potentially seen taking out key support from earlier, from a few days back, going back to the 27th of July at 123. A break below 123 would then accelerate declines back down towards that low, that critical low from the 8th of July at 121.30. At this point, only a break and a daily close above 124.50 would take the immediate pressure off the downside and open the door for a retest of the recent 2015 and multi-year high at 125.85 from back on the 5th of June. Euro Swiss. So Euro Swiss remains highly constructive following that break that we saw a few days back above 105.75, and any setbacks that we're seeing right now are viewed as corrective, with the market looking for a higher low somewhere ideally in the 105.75 area ahead of the next major upside extension back above recent highs and towards the February peak at 108.15 further up. At this point, look for any setbacks if we do see a break below 105.75 to be well supported in the 104 area, with only a break and close back below the 104 level to take the immediate pressure off the top side. Aussie dollar. So Aussie saw an interesting bullish outside day formation earlier this week on Tuesday, and since then the market's been locked in a bit of a consolidation. Despite a fresh 2015 and multi-year low on Thursday trade, the market would just manage to squeak out that low and has since recovered. Don't rule out the possibility now for a double bottom formation in Aussie dollar, with the market seen correcting higher. An overdue correction is in the cards, with a break back above 73.50 to confirm and open the door for a move up towards the 74.50 area. But inability to take out 73.50 will keep the immediate pressure on the downside and open the door for fresh setbacks and fresh multi-year lows. Dollar CAD. So dollar CAD put in a fresh multi-year high a few sessions back at 131.03 and has since been correcting a little bit. At this point, there is room for deeper setbacks in this market and a more significant retracement down into the 126s, though the market is confined to a highly constructive trend, and any setback should be well supported in favor of a higher low and fresh upside extension beyond 131.03 for a bullish resumption. Kiwi dollar. So Kiwi could be carving out a bit of a short-term base after the market broke down to its fresh multi-year lows just under 65, and the market has basically since been just trading in a sort of slightly higher to sideways consolidation. At this point, a break back above recent highs that we saw all the way up at 67.39 could open the door for further corrective activity, while inability to do so will keep the immediate pressure on the downside. SPX 500. So the S&P 500 is back to trading within a familiar range, right in the middle of that range, between the May record high and the March low that we saw down at 2040. At this point, it does look like the market is still trying to maybe carve out a more meaningful longer-term top, and a breakdown and break back below that elusive March low would be required to confirm and accelerate declines. However, inability to break lower, followed by a pushback above 2137, would negate and open the door for fresh record highs. Gold. So gold continues to consolidate after that collapse we saw the other week to fresh multi-year lows below 1100. And the market could be locked in a bearish consolidation ahead of a fresh downside extension towards critical psychological barriers at 1,000 further down. Still, daily studies are oversold at this point, and there is risk for a short-term bounce. But a break back above previous support at 1142 would be required to take the immediate pressure off the downside.